Dirty dealings, corporate battles, consumer woes. This is Evening 5. Bank Negara on Thursday kept the benchmark interest rate unchanged, a move that was widely expected, citing improving economic growth and moderating inflation. The overnight policy rate was maintained at 3% following the Monetary Policy Committee's two-day meeting. A survey of 19 economists polled by Bloomberg had all expected that BNM would keep OPR unchanged. BNM said that moving forward, growth is expected to improve in 2024, driven by the recovery in exports and resilient domestic expenditure. Export growth is turning positive after contracting since March 2023 and will continue to be supported by stronger global trade. Malaysia's economy, the third largest in Southeast Asia, may expand 4 to 5% this year, according to the official forecast. Following weaker than expected 3.7% growth in 2023, the government is betting on resilient consumer spending and business investments amid better external demand to drive growth. The OPR has now remained unchanged for 10 months and was last raised in May 2023 by 25 BPS, closing a cycle of what the central bank has called normalization. BNM reiterates that the monetary policy stance remains supportive of the economy and is consistent with the current assessment of the inflation and growth prospects. Apart from external demand, BNM expects continued employment and wage growth to buoy household spending, while investment activity would be supported by the ongoing multi-year projects in both the private and public sectors, as well as various national master plans and higher realization of investments. Growth outlook, however, remains subject to downside risks stemming from weaker than expected foreign demand and larger declines in commodity production, says BNM. On inflation, BNM notes that inflation in 2024 is expected to remain moderate, broadly reflecting stable demand conditions and contained cost pressures, an outlook highly dependent on domestic policy changes and global commodity prices and financial markets. The central bank also reiterated that the ringgit remains undervalued given the economic fundamentals and growth prospects. American tyre company Goodyear said on Thursday that it will continue to sell their products in Malaysia following the closure of its manufacturing plant in Shah Alam, Selangor. A spokesperson said that the group will continue to serve the Malaysia market with its industry-leading products and solutions from other manufacturing sites within Goodyear's footprint. The company plans to begin shutting down its Shah Alam manufacturing operations by June 30th in a move that will result in the loss of 550 positions within the plant, according to an internal memo written by Nathaniel Madarang, president of Goodyear Asia Pacific, cited by The Edge. The move mirrors electrical home appliances maker Panasonic Manufacturing Malaysia's decision last year to close 2 product manufacturing departments in Shah Alam. In 2016, British American Tobacco Malaysia wound down its factory operations in Malaysia and started importing its product regionally. Goodyear's presence in Malaysia dates back to 1908 when the Goodyear Orient Company, a rubber buying firm, was established in Singapore to purchase rubber from plantations in then Malaya and Indonesia. Goodyear began selling its products in Malaya in 1929, according to its website. Madarang said the entire closure process is anticipated to complete by the end of the year. The move, he said, is part of the so-called Goodyear Forward, the company's transformation program to optimize its footprint and portfolio and deliver significant margin expansion. The program includes specific actions to deliver annualized cost reductions of $1 billion by 2025, according to Madarang's memo. Property developer Exsim Group's founders, the Lim brothers, are acquiring a 65.9% stake in Pan Malaysia Holdings from 3 companies linked to prominent businessman Tan Sri Khoo Kay Peng. The stake was purchased for 36.73 million, which works out to 6 cents per share. This confirms an earlier report in The Edge that several parties were looking to take up a block in PMH. These transactions represent a 45% discount to PMH's latest closing price of 11 cents after falling 4.4% on Thursday, valuing the group at 102.17 million ringgit. Exim Group was founded by brothers Lim Aik Ho, Lim Aik Kiat, Lim Aik Fu and Lim Aik Kiong in 2008. Through Exim Hospitality Holdings, the company is buying a 38.59% stake from Loyal Design, 18.4% from Mui Media and 8.91% from Megawise. With the acquisition, Exim Hospitality is obliged to extend an unconditional mandatory takeover offer to buy up all the remaining shares in PMH at a cash offer price of 36 cents per share. Exim intends to maintain PMH's listing status on Bursa Malaysia. Both Loyal Design and Mui Media are wholly owned subsidiaries of Malayan Unit Industries, while Megawise is wholly owned by Pan Malaysia Corp, which in turn is 51% owned by Mui. Khoo is deemed to have 41% indirect interest in Mui. PMH became a takeover target after it sold off its stockbroking and asset management business last year for $90 million, leaving it with the 10-story Chorus Paradise Resort in Port Dickson, along with its surrounding land, with a book value of $34.83 million, according to its latest annual report. PLS Plantations has inked a deal with China-based Guangzhou Jiangnan Agriculture Development Co. to build a regional one-stop wholesale market in Johor for the processing and marketing of Malaysian agricultural produce. In a statement, PLS said the company signed the agreement in conjunction with the official visit to China by a Johor delegation led by MB Dato' On Hafiz Ghazi. PLS said the regional wholesale markets, which will be built in Pasir Gudang in Johor, is a significant step towards boosting Malaysia's food security program. PLS Executive Vice Chairman Tan Sri Lim Kang Hu said that the one-stop offtake centre in Pasir Gudang will serve as a hub for farmers and other food producers seeking support services, market access and logistical assistance. He added that the aim is to streamline the supply chain process, provide convenience and efficiency for producers and consumers alike. Lim said the parties will also explore investments in farming and plantations, including factories for processing, packaging and distribution of quality products to local and export markets, and one of the main products will be durian upstream and downstream products. Dagang Exchange is planning to collaborate with Korea Trade Network on several initiatives involving port community system, electronic customs and IT consultancy services for trade facilitation. KTNet is South Korea's national paperless trade infrastructure operator, according to DNeX's boss filing on Thursday, and operates the U-Trade Hub platform for all businesses in international trade in collaboration with the Korean government. The company is also known to have implemented its e-custom systems in other countries. DNeX's wholly owned DagangNet Technologies has inked a 2-year memorandum of understanding with KTNet for the deployment of homegrown technologies from DNT and global capabilities from KTNet to assist in the transformation of the trade facilitation industry, jointly develop products and services by leveraging on the expertise of both parties, and to expand the offerings each has to offer to their respective clients. For the 18 months ended December 31st, 2023, DNeX incurred a net loss of 119.95 million on revenue of 1.91 billion ringgit.